Last year, we witnessed the Great Resignation, in which the number of workers who quit their jobs set an all-time high. The Great Reset, in which you are said to own nothing and be happy by 2030. And the Great Transfer, in which millennials are said to inherit $35 trillion. But now, we have what could be the greatest crypto transfer in history. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. So far in 2022, the Nasdaq has entered a bear market. Hundreds of stocks are trading at all-time lows. The economy has begun to contract. Inflation is at its highest in 40 years, and a recession is likely. What most people don't realize is that beneath all of the bad news is one of the best opportunities in recent history to build your wealth faster than ever before. The market is not doing so well right now, as we saw during the everything rally. Those days are long gone, and the opposite phenomenon is now known as the everything sell-off. Before we get into the implications for the stock market, housing prices, and cryptocurrency, it's worth discussing the current state of the market because the recent decline can be broken down into three major categories. The first no-brainer is inflation, but not just any kind of inflation. Wages rose as demand soared, forcing businesses to staff up quickly to fulfill orders and production. And prices rose so quickly that we experienced a 40-year high inflation. However, it was in the definition of transitory that things went horribly wrong. It is important to note that high inflation is not enough to cause everything to begin selling off, but it does cause interest rates to rise. Higher interest rates, on the other hand, make stock market valuations look less appealing. Mortgages cost more to borrow, businesses must pay higher overhead, and the average consumer. That means they have slightly less disposable income to spend, which brings us to three uncertainties. There is currently concern that businesses will begin to lay off workers due to slowing demand. Rocket Mortgage was forced to downsize, and I believe it is reasonable to expect this to continue in many more industries. Combine that with the uncertainty of an impending recession, some uncertainty from the Russia-Ukraine conflict, impending rate hikes, and stagflation for a decline. We'll begin with the stock market, which recently experienced its largest drop since 2020. Even if you take a step back, it's a long way down. The Nasdaq is down more than 30%. The S&P 500 is down 17%, and the Dow Jones is down 13% from its peak, with the average retail portfolio now down 2%. According to DataTrek at 4000, the recession odds embedded in the S&P are close to zero, according to their math. They also stated that in the previous 10 instances, stocks suffered significant losses in the first 4 months of the year. 6 saw the market extend its decline into December, with only 2 seeing gains of more than 10%. However, stock market losses are relatively minor in comparison to the second topic, cryptocurrency. CNBC recently reported that 40% of Bitcoin investors are in the red, with prices down more than 55% from their peak. It's important to note this because over the last year, Bitcoin was frequently viewed as hedge against inflation, a way to store value, and a way to protect against market volatility. However, as we've seen this year, there's very little correlation, and it's actually following the same path as tech stocks. In other words, as interest rates rise, investors take a risk-averse approach, shifting their money into safer, less volatile assets, causing cryptocurrency to suffer. However, people have been taking advantage of this opportunity to dollar cost average into the markets on a regular basis with the exchange FTX US, whose fees are up to 85% lower than the top competitors. They are also one of the largest cryptocurrency exchanges in terms of daily users and trading volume. They're also one of the few brokerages that lets you set up an automatic recurring deposit to build your portfolio over time. In terms of the future, Fundstrat Global predicts a bottom around 29,000 per coin, and El Salvador is still buying the dip. However, we've been trading well below the stock-to-flow model's target price for over a year, so it's clear that the investors do not see real estate as a safe haven asset just yet, despite the fact that nothing is safe in this market, including real estate. Rising interest rates have caused 30-year mortgage rates to reach their highest levels since 2009. However, buyers are beginning to see the bright side, with inventory finally beginning to improve, which could potentially mean more appealing prices. For the first time in what seems like an eternity, sellers are beginning to lower their asking prices in more than a dozen cities. This suggests that some affordability relief may be on the way to a market near you. This is also one of the reasons why people have decided to re-enter the real estate market. Aside from that, with non-stop Reddit posts about selling everything and moving to cash and wondering how bad things could get, here's what you need to know, because if you just pay attention, you could end up witnessing one of the largest transfers in the last 2 years. Here's the thing. When markets experience massive declines, it's critical to examine them objectively to determine what's likely to occur. And if we look at previous bear markets, we can see that there may be a lot of opportunity now. Throughout history, there will always be times when the market proves to be an outlier, and the market will never always follow the average. For example, the market fell 34% in a single month in 2020, the shortest bear market in history, before recovering to where we are now. Prior to that, the market fell 56% in 17 months during the Great Recession, and if you had invested right before the decline, it would have taken you about 4 years to break even. The same is true of the dot-com crash, in which technology stocks lost approximately 78% of their value, and many of them took more than 10 years to recover if they were lucky, as well as many more throughout history, each with their own unique reasons. However, it is estimated that standard recessions cause a 26% drop in peak-to-trough earnings, implying that we may have some more room to fall. There is some good news in that now may be an excellent time to invest because this is where the money is made. If we exclude drops of less than 20%, the average bull market has lasted a whopping 9.1 years with a cumulative return of 476%, and if we include drops of less than 20%, which are essentially hiccups along the way, the average bull market still lasts an average of 4 years with a cumulative return of 129%. We also had a brief period during the Great Recession, when the markets rose 24% in 1.5 months before falling another 27% 2 months later. Aside from those 2 instances, we have to go back all the way back to the 1920s to find anything comparable. There are numerous examples of bear markets lasting only a few days during the Great Depression, such as a 23-day bull market with a 25% gain. Following that, there was a 42% drop, followed by another month of a bull market that increased by 30%. So while it is true that bull markets tend to last significantly longer than the bear markets, the context demonstrates that extreme volatility is very common, and drops or gains of 20% are not as extreme as you might think. Not to mention that half of the best days for the S&P 500 in the last 20 years occurred during a bear market. Another 34% of the market's best days occurred in the first 2 months of a bull market, before it was obvious that a bull market had begun. Because stocks, for the most part, are forward-thinking. The best time to buy is usually before everyone else says it's the best time to buy. The truth is that if you buy inconsistently and on a regular basis, regardless of where the market is trading, with the intention of holding for at least 10 to 20 years, you will never lose money. When people are worried about their portfolios, they avoid seeing red and resist the urge to sell. Go out and sell everything because now is the time to buy in a discount, because unless you're a few years away from retirement, any drop in the market should be viewed as a gift. Each of these events presented a one-of-a-kind buying opportunity that would have made patient, consistent investors a fortune. It could be argued that this time is different for each of these market crashes. No 2 bear markets will ever be the same, and once we've exhausted the unknowns, things will begin to improve. No idea when that's going to happen, but I have a feeling that eventually we'll be able to look back at this very moment and realize that it was a good buying opportunity. It's not to say that market can't drop even more, because most likely it can and it probably will. For those who have income and stick with the principles that have worked throughout the last 100 years, this will be the best opportunity for one of the greatest transfers in recent time. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.